You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. The Options Insider Radio Network is sponsored by Fidelity Investments. At Fidelity, you'll always get a great value for your options trades. And with powerful investing tools that provide clear next steps, plus independent research and a wide range of investment types, we can help you make better trading decisions. Learn more about options trading with Fidelity at fidelity.com/options. Options trading entails significant risk and is not appropriate for all investors. Certain complex option strategies carry additional risk. Before trading options, contact Fidelity Investments by calling 800-544-5115 to receive a copy of the characteristics and risks of standardized options. Fidelity Brokerage Services, LLC, member NYSE SIPC.
Good morning. Today is Monday, October 8th, 2018. This is your Options News Rundown. I'm Dan Passarelli. Our first story today is from investing.com. It's the top 5 things to know in the market on Monday. First thing to know is Wall Street points to a lower open. U.S. stock index futures pointed to a lower open amid ongoing concerns that rising U.S. Treasury yields are gradually making equities less attractive for investors. Rising bond yields can crimp demand for assets perceived as riskier, such as stocks, particularly when those yields are higher than those of equities. The second thing to know today is U.S. bond markets are closed for Columbus Day. While U.S. stock markets are open for trade on Monday, bond markets will remain closed in observance of Columbus Day. The holiday is one of only 2 in which stock and bond market holidays diverge. Veterans Day is the other. Market focus this week will remain largely attuned to moves in U.S. bond yields, which have surged recently following a batch of upbeat economic data that bolstered the case for the Federal Reserve to raise rates in December and beyond. The yield on the benchmark 10-year note reached its highest level since 2011 on Friday. It climbed about 15 basis points last week and is up about 20 basis points over the last month. Currency markets were operating as usual. The U.S. dollar index, which measures the greenback's strength against a basket of 6 major currencies, was up around 0.3% to 95.56 after hitting a 6-week high of 95.78 last week. The third thing to know today is Italy drags down European markets. Italian politics remained a drag as the European Commission warned the country's budget deficit breached past commitments, leading Rome to insist it would not retreat from its spending plans. Italy's Deputy Prime Minister Matteo Salvini on Monday dubbed European Commissioner President Jean-Claude Juncker and Economics Commissioner Pierre Moscovici as enemies of Europe, further adding to negative sentiment. The fourth thing to know today is Chinese equities suffer worst day in months. China's stocks fell sharply on the first trading day since the Golden Week holidays ended, despite an announcement from Beijing over the weekend that it would slash the level of cash that banks must hold as reserves. The move by China's central bank, its 4th in 2018, came amid concerns about the economic impact of Beijing's ongoing trade war with Washington. China's blue chip CSI 300 index tumbled 4.3%, its biggest daily loss since February 2016, while the main Shanghai Composite Index dropped 3.7% to end at the lowest level since June 19th. And the fifth thing to know today is from Investing.com. Oil slides amid talk of U.S. waivers on Iran. In commodities, oil prices were on the back foot after the U.S. said it may grant waivers to sanctions against Iran's crude exports next month, and as Saudi Arabia was said to be replacing any potential shortfall from Iran. U.S. crude was down 1% at $73.56 a barrel. Brent crude fell 1.3% to $83.06 a barrel. Our second story today is from CNBC.com. Housing stocks just posted their longest losing streak ever. Home builder stocks just got crushed, and some market watchers say there's far more pain to come. The XHB, the popular home builders tracking ETF, just posted its longest losing streak ever, falling for 13 consecutive sessions amid a breakout in U.S. Treasury yields that injected new risk into the rate-sensitive group. The XHB has tumbled 9% in just 1 month, entering into a bear market. Interest rates and mortgage rates are keeping potential buyers on the side, said Aaron Gibbs, portfolio manager at S&P Investment Advisory Services. Those elements, along with other fundamental drivers, give her reason to believe investors should stay away. Our final story today is from Investing.com. Gold, silver, and copper prices, the weekly outlook for October 8th through 12th. A stronger U.S. dollar and rising U.S. government bond yields could represent a significant headwind for gold this week, despite Friday's gains, as the precious metal's inverse relationship to the greenback continues to offset safe haven demand. With a fairly light week on the economic calendar, investors will continue to monitor the effects of rising U.S. government bond yields on markets when U.S. bond markets reopen Tuesday after Monday's Columbus Day holiday. Concerns over Italy's rising debts and strains in emerging markets will also remain in focus as markets continue to digest Friday's mixed U.S. non-farm payrolls. Gold futures ended higher on Friday, snapping 2 days of losses as the dollar softened after the Labor Department reported that the rate of job creation slowed sharply in September, while wage growth also eased. And that, ladies and gentlemen, is news you can use for today, October 8th, 2018, your Options News Rundown. I'm Dan Passarelli, Trade Smart, and have a great week.
Thank you for listening to the Options News Rundown. To learn more about these stories or any other developments from the world of options, visit www.theoptionsinsider.com, the premier source for free options information. The Options News Rundown is brought to you by Market Taker Mentoring, the leader in option trader education. Get trader education, daily trade ideas, and more with a free 1-week trial of Market Taker Mentoring's live Advantage group coaching class by visiting markettaker.com/insider.
The preceding program was a production of the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.